Hello and welcome to Crypto Weeklies. In this video, we analyze Solana and its token Sol. None of the content is financial advice. Let's get started. The price of Sol is now meaningfully below the 200-week simple moving average. The blue line over here, which has turned white as the price fell below the 200-week simple moving average, price is at around $84. 200-week simple moving average at around $104. So a air gap of about $20 again compared to the last bear market. Salt at a weekly level did again, if this range over here is similar to the 2021 lows that got challenged in 2022 before that ultimate crash for Sol. If we are at this point over here, a breakdown from this position could usher Solana's panic case scenarios and the bear case bottoms, which likely would not bottom until the price goes somewhere over here in this region where the bottom for Sol. Per this technical analysis, this area is always likely to be in the play. This green line over here, just ignoring the price range over label over here, this green line as a line over here in this zone. If we want to make it a zone instead of a line, what we can do is create a channel on it. Let's say the bottom of the channel for Sol for this bear market bottom is at around $30. The midpoint is at around $37, and the optimistic case for a bottom is at around $47. That's again if we don't get another flash crash like Sol got in November 2022 when FTX collapsed. So just ignoring that scenario for Sol for now, the first series of lows could take Sol about 40 to 43% lower than the current price, just shy of $50. Then the second one just shy of $37, which is about 56% crash, and the bear case scenario for Sol bottom is at around 65% of the current price at around $30. So those are the three technical levels of key importance. Right now, as mentioned previously, right now the price of Sol, if it were to bottom, like in the last market cycle, the price bottomed at around 97% of the peak. This time around, an 80% bottom for Sol could take the price action close to that $50 level, which is again coincides with this trajectory over here, where the price action bottoms at around $50, which takes the price action close to that early 2022 bear case scenario. If let's say the drops are much more severe than 80%, let's say going to the 84 to 85% level, then the price action could bottom at around 45%. Coming to our own website again, this website deals with one crypto at one row and analyzes the regression based sentiment, the machine learning based sentiment, time weighted average price, and the overall risk for accumulation using technical analysis or simple moving averages. Let's start with the simple moving averages based risk for Sol accumulation. The normalized risk has gone quite low, as one would expect, as 200. This is the first time since 200-week this red line over here came into play, and the price went below the 200-week simple moving average. So that component is something that Sol has to contend with for the first time. So just bear in mind the normalized risk over here going to zero does not mean that much. The time weighted average price risk though is much more of an indicator, which again accumulating below the blue line. This is the average price of Sol multiplied by the time spent at those key averages. Helps identify what is the price in the bear market that the price could, if it were to go below it, could usher in a great accumulation phase like it did back in 2020, late 2020, and then in 2022. Accumulating below the blue line was definitely not the worst idea. Not financial advice. Right now, the time weighted average price for Sol is at around $85. So this is the first time the price has dropped below the time weighted average price as of today. So that's why we are making the video, just to signal uh, similarity in the market conditions like they were back in May 2022, where the price for the first time in that bear market fell below the time weighted average price. This does not necessarily mean that the price has bottomed. You can see that back then the time weighted average price was at $57, whereas the price actually bottomed less than $10. But it's over a longer period of time, if the underlying hypothesis is that the underlying asset, that is Sol, has a chance to make new highs in the next bull run, per the 4-year market cycle theory in the crypto asset class, if Sol stays relevant after this bear market and still carves out a new high, and just ignoring the noise, accumulating the time below the time weighted average price, with again there are drops expected at least 25 to 50% from this level. Again, nobody can call it with a certainty, but again, the as Bitcoin and major cryptos have no have are nowhere close to their own time weighted average price or their bottom, becomes more and more likely that Sol has not bottomed before these other major cryptos bottoming. So, for example, ETH over here, ETH with respect to its time weighted average price is still, there is a air gap of about $300. Bitcoin again doesn't typically bottom below the time weighted average price, but bottoms when this time weighted average price based color codes are at least in this blue color. Now we are in the green color, somewhere close to that May 2022 time period. But still, from there, Bitcoin did have almost a 50% correction. So a 50% correction from here would get Bitcoin to at $34,000. That's the worst case scenario for Bitcoin, by the way. But again, the optimistic case is at least price action goes to that 50k or slightly below that 50k level. So that hasn't happened. That means Sol bottoming before Bitcoin is highly unlikely. In the last bear market as well, Sol bottomed after Bitcoin, not before it. Before Bitcoin. So something to watch for. The regression based risk levels again are have been low for Sol, as the price action has been closer to the regression based fair value for most of its 2024-2025 time period. So instead of looking at the daily price action, looking at the regression model in terms of the weekly levels makes the most amount of sense. This regression based fair value is derived from the polynomial regression model with 2 degrees of freedom, trying to make it as quadratic as possible just to account for the non-linearity between the price and the fair value with respect to the time. As this underlying asset is an altcoin, it has the cyclical element inbuilt in the fair value calculation. So the ceiling for Sol was at 2 standard deviation residual, but this time around the ceiling fell short of the 1 standard deviation residual as well. So the bottom could well be in the last bull run was close to that green channel over here, which was the 2 standard deviation residual. But as the top went nowhere close to the 2 standard deviation residual to the upside, this orange line, the bottom could well be at around 1 standard deviation residual to the downside. That is this light green line. So ignoring all other lines for now, just looking at the green line and how the price action could come to that level. The current undervaluation scenario for Sol is at around $45. It's very likely that as we move towards the end of 2026, it's more likely than not that the price action goes to this green line, or at least comes really close to the green line, based on what the 1 standard deviation residual is at that point. Right now it's at around $44. In late 2026 it could be close to that $40 level, again bringing Sol somewhere in the middle of that range, somewhere at around $35 level, before there is a major bottom for Sol. Per this analysis, the 20-week simple moving average price risk level for Sol has gone down, as the price is now moving very close to that. So the distance between the price and the 20-week simple moving average has widened quite a bit. You can see it over here. Or actually, let's go back to our own website. It does not. This website does have a 20-week simple moving average price based level. So the 20-week simple moving average is at around $157 level. The price is almost half of that at around $85. So it's only logical that the with such a higher delta between the price and the 20-week simple moving average, the 20-week simple moving average price risk has gone down. The machine learning based price analysis for what Sol could do if, let's say, there is 4 months of bearishness into the future. This is assuming 6 months of bearishness into the future. Let's cap it at 4 months. So from February we have March, early April, and early May. So till early May, if the price action were to stay bearish, per this model, 4 more months of bearishness could take the price action of Sol close to that $45 level. Again, these different models are signaling confluence at around this level, and these models necessarily do not have any underlying assumptions which kind of have like a conflict between them or any correlation between them. So they are all standout models, but still they are signaling a confluence, at least a non-panic bottom for Sol going to less than $50 level. So that's what is the confluence. The panic case is again much worse. Let's say if there is a panic of, let's say, couple of months along the line, after, let's say, achieving like non-panic bear case for like 2 to 3 months, and then one more month of panic, assuming let's say the panic occurs in April, um, when the price action is close to that $48 level and then falls for one more month, then the price action could go into the lower $30 levels. Again, with that bottom line over here, bottom of the range at around $30 level. All in all, the estimated bull case and the bear case for Sol. Let's start with the bear case and then conclude on a happier note. The 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 scenario for Sol, as it relates to these risk based model, the time weighted average price risk is still quite elevated. Although the price is now below the time weighted average price, the difference between the price and the time weighted average price is minimal. So the bear case scenario is slightly under $50, and the panic case scenario is slightly under $40, as established by these risk based models. They try to tune out most of the noise of any individual model. In the bull case, again, this is again way out into the future. If Sol manages to garner significant attention, and if there is a prolonged alt season, the price estimated by these risk based models is at around $2,800 level. Again, these models need to be revisited after the bear market to look for any confluence. Again, if there is a 30x of this market cap of roughly speaking 50 billion, that puts Sol at around $1.5 trillion as a market cap, and it could take several years if it were to take or materialize in that way. So that's something to hope for the future. Not financial advice by any stretch of the imagination, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.